10-year note yields continue to trade the range we've seen over the last several weeks. Again, testing the 275 level from the bottom half and again failing to get there. We haven't traded above 275 in yield since December 28th, and the market now seemingly nudging up against that 275 level again, but we are failing to get through it. We're failing to find sellers in the Treasury market when we get to that level, which suggests to me that they're either the core remains short or they just don't see any reason for yields to go higher at this point, at least until there's more clarity. So right now, holding at that 275 level in yield, but not getting through it. And if you look at market volatility, it's starting to look a little bit like early 2018 and late 2017, where we kind of try and hold on to those elevated levels, which we have been for the last several weeks, and now we're starting to turn, and each day we seem to pick up some more steam to the downside. So volatility going down as the market just sits and waits and hovers. You'd think the opposite would occur ahead of key events or uncertainty, but we're not seeing that. In Treasury land, what we're seeing is volatility starting to get softer. So softer volatility as yields hold the range. What about that Brexit vote that we saw yesterday? Well, today we had the no confidence vote, which did pass. So Prime Minister May will stay in. However, it was closer, I think, than most thought. And I think that right now bigger problems lie ahead. They didn't get their plan through yesterday. Obviously, they're going to keep the May administration on today. But the bigger problem remains, how are they going to straighten this out, untie the knots, and get an agreement in place that not only benefits the UK, but the EU, and gets everybody happy again? Because right now they don't seem to have that, and they don't even seem to have a path to that. And how will that affect the global economy in itself? That will all benefit buyers of treasuries. So right now, I think that the risk off trade remains. We continue to see it not only in treasuries, but also in gold. And equities are kind of off on their own. So right now, treasuries not really reacting to what's happening in the equity markets, more so about what's happening in the global markets. So look for treasury yields to remain stubbornly low. Look for gold prices to creep higher. And I think ultimately none of this gets untangled until there's clarity, which could take a long time, even out as far as March 29th.